Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Thursday, July 19th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, I had introduced some short-term levels to keep an eye on, specifically these red lines. At the time, the SPX was rallying right up to this line, which was descending peaks right there, and challenging that. The Dow had just pushed above a similar line. As far as the comp goes, it had actually pushed above and was testing this prior peak right here, little twin peaks right there, testing those as support. And the rut was continuing its consolidation. And basically, the takeaways were keep an eye on the SPX to see how it handles this downtrending line. The comp was constructive and said that, it was an encouraging sign for the overall market that the comp was holding up. And the rut, I mentioned the fact that this consolidation, while boring on a short-term basis, is just part of a long-term consolidation, and keep that in mind. When we turn to this week's charts, we see that the SPX was not contained at that downtrending line. In fact, if you were reading the blog, you saw that pretty much at the end of that day it was violated, and I've been discussing that. What I mentioned yesterday was that this peak and this peak here, let me highlight those former peaks, that was a short-term support level, and when we pulled back yesterday, we came back and tested that. If you look at it from this perspective, you can see that actually that downtrending line, there was a perfect retest there. But and I wanted to highlight that, whether you look at things on kind of an absolute level like this, you look at them, the downtrending lines, basically they all kind of point to the same thing, the fact that we had a breakout, and when you see some sort of retest, you're looking for signs that buyers step in. That's technical analysis theory, that former resistance becomes support. It's this point where buyers, should be expected to come in. Like anything, it doesn't always work, but when it does, what it does is it gives you something to watch and sort of key off of. In the case of yesterday, we saw at the worst levels, we were kind of right down at there, and then things started kind of stabilizing, and by the end of the day, we saw the bounce, and today we're flirting with the recent peaks. As far as the Dow chart goes, the Dow was already above that when we were talking about that, so we've got the breakout, this consolidation period here, we've got the breakout, so that's a constructive sign. On the comp, basically, we saw the breakout and retest right here last week, and we were talking about the bounce. So, that was in the context of these ascending lows that I've been discussing. If you ignore all of that, the main takeaway is basically the comp's in an uptrend. I mean, that's the basics of it. Buying demand is outstripping selling pressure. From a technical basis, that tends to be constructive. And when we turn to the rut, again, that same daily grind, putting you to sleep on the short-term basis. But keep in mind that the longer-term pattern of this is a consolidation amid a long, strong uptrend. So while the day-to-day action may seem sleepy and boring, and this doesn't give you really much to key off of, keep in mind that when you step back and you look at it, you say, okay, there is a strong uptrend here. So that's not something to ignore. As far as overall takeaways, the charts are constructive still. We're sitting above this intermediate term support. We're somewhat extended from that. So if we do see a pullback, that's where you're looking. But the action still seems constructive. As far as the rut goes, again, long-term uptrend still there. Don't forget that. And we are heading into the real thick of earnings season, so the action's going to get whippy. But in the midst of that, I would try to keep the longer term picture in mind that we've got some constructive action here. So anyway, that'll be watching these short term levels next week as earnings roll out, and as always, stay tuned to the blog for further updates.